Traders, if you want to hear my top ideas and thought process for several stocks that could make impressive moves this week, stick around as I go over each plan in detail, starting off with Tesla and looking for a consolidation breakout in Tesla this week. So, although the stock's been beaten down in a downtrend, sentiment remains bearish for the most part, and there's a looming catalyst on the horizon, a decision set to be made on Thursday regarding Musk's pay package. I think a multi-day bounce is possible, along with remaining open-minded and being prepared for a potential consolidation breakdown to the downside. So I'm prepared for either scenario, and I think a directional move is likely to happen this week. So this is exactly what I'm thinking. Now, of course, it's highly reactive. It's conditional. I'll only be reacting to price action. There'll be no predicting ahead of a directional move. So if the stock breaks out, it's a big if it breaks out, and we're above short-term resistance, we're above the previous multi-day range, we're trading over 180, I'm going to look to enter long with a stop at the day's low, just below the day's low, and the first target to take some off would be a move towards 186, 187 from 521. There might be some short-term supply, there might be some overhead resistance coming into this area, so this would be target one to take some risk off of. And after that, as long as the stock is holding up intraday, as long as we're making higher highs over intraday VWAP, I'm going to look to trail my stop pretty conservatively, given the bigger picture here on the 5-minute chart, targeting any intraday extensions away from the intraday volume weighted average price, and significant higher highs to be taking profits off and trailing my stop over around 2 days. Now, similarly, here's my plan for the short. So 172 is the key and major area of support along with the 50-day. So once this area, if it does give away convincingly, if the stock breaks below 172, similar to my plan on the long, I'm going to look to enter short for a multi-day swing move. Now, like the long idea, I'll short on a breakdown, or I'll short a lower high versus the high of day, or if I'm shorting a breakdown, I'll be short versus that breakdown point. And the first target to take some risk off is, for me, going to be into this 168-ish zone, 168 to 167, which is just kind of under 1 ATR from entry point. And after that, like the long, I'm going to be trailing my stop on a 5-minute time frame, so conservatively, for a multi-day up to 2-day move, looking to cover on any major extensions away from VWAP, as well as trailing my stop using lower highs and covering on lower lows and major extensions. Now, everyone's obviously talking about GME. GME has all of the attention, everyone's talking about it, and plenty of opportunity really on both sides, long and short. So, how can I not talk about GME? Now, from a swing perspective, I want it to be known that I'm not trading it, over multiple days here. I think there's too much risk, guys. I think that, you could be long, and you could be in a position and they pre-announce earnings like we saw on Friday, or they announce earnings early as well as drop an ATM, which is why they announced the earnings early. And importantly, why do they do that? Huge volume, huge liquidity, and so they can take advantage of that with the ATM. Now, alternatively, you could be short, and Roaring Kitty could come out Sunday evening with a video or something to just kind of spark a whole new wave of enthusiasm, of optimism. Alternatively, in the upcoming week, GME's Ryan Cohen, they could come out and announce a strategic update or maybe even an acquisition now that they're sitting on a large pile of cash. Any turnaround strategy. Either way, there's too much risk for me to have a swing trade on right now. So I'm sidestepping it from that perspective. However, where is the opportunity going forward for me? It's purely on the intraday basis, right? So for me, I'm going to be reactive to some critical areas. I'm just using levels from previous day, previous couple of days, and I'm just going to be looking to be reactive. So for example, barring any news, barring significant developments, if the stock popped back into a potential area of supply, for example, from Friday, if we come back into the mid to high 30s, 35 up to 40, then I'd be looking for failure and I'd be looking for a intraday short opportunity. Alternatively, if the stock washes out quite drastically on Monday or during the week, again, barring any news, significant developments, and we come into the mid to low 20s, previous support. We'll see if bids continue and if buyers step in and we continue to support the stock in that zone. I'd be looking for an intraday long perhaps. So I'm really going to just be paying attention to key levels, see how the stock trades around those levels, and look to be reactive. For the time being, definitely will not be looking to put on any positions for 2, 3, 4 day holds. I just think that there's just too much risk involved right now. On an intraday basis, I don't think that's the case. So I'm going to be looking around key levels, looking to react to price action, but not on an overnight basis. So some additional ideas, starting with Reddit. Reddit had some nice follow through this week. It was on my list, but I was focusing and prioritizing my attention elsewhere, so I wasn't involved. But basically what I'm looking for now is for this consolidation to continue to form. Ideally, I would like to have a few inside days, a few more days of consolidation, some sideways action to set up a fresh long entry for consolidation breakout. Now, as this sets up and as it forms, if it continues to shape up and provide a nice risk reward entry over the course of the next week, I'll give some more thoughts and a more detailed plan for Reddit. And then lastly, we have a mover from Friday, TPHS. TPHS is on my list because it was a really incredible sell-off from the highs on Friday. Tons of dip buyers got caught. A lot of longs are bagged. A lot of people that might have been thinking this could be the next FFIE. I saw those comments online. And look, I'm doubtful. However, if this can push back into 30, into 35, 40 cents, I'm definitely going to be looking for intraday failure, for level to trade against, and I'll be short that. I'm looking for a move over a day or 2 or 3 days back down towards the mid to low teens where the move started from. So these are my top ideas for the upcoming week. Of course, there are a ton of names that pop up throughout the week that take my attention. And I'll prioritize my focus where I see the best opportunity and expectancy. But coming into the week, these are my top ideas. Let me know what you're watching. Let me know if there's anything that should be on my list coming into the week. And let me know what your thoughts are on the stocks that I shared, on GME. Let me know what you're thinking for the upcoming week. And I hope you all have a brilliant week, successful week trading. And I'll see you all next week.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of S&B Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with S&B to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part? You don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.